Hey, everybody, welcome. I'm going to call this meeting to order for the Board of Directors for the Central Oregon Intergovernmental Council for August 5th, 2026. Welcome, everybody. We're going to start with introductions. I'll start with myself. Mike Riley, Penn City Councilor and work here.
I'm Kenna Bullock. I'm the HR Director, COIC.
Michelle Williams, COIC Deputy Director and School Manager.
Mark Shepherd, Councilor, Brandon.
Cheryl Pellerin, City of Sisters, City Council, the cities, sorry.
Matt Riggle, appointed by the Deschutes County. Deschutes County Commissioner.
Graham Walter, Culver, City Commissioner.
Christy Abbey, Metolius City. Tammy Beatty, Executive Director.
John Nielsen, Redmond City Council.
Kimberly Howell, Executive Coordinator.
Patrick McClellan, Officer, COIC. Sean Keithley, Community and Economic Development Director, COIC.
Hello, Dana Donut, Adult Program Manager, COIC.
Jenny Corkeely, Adult Income Screening Counselor, COIC.
Brian Bellasuso, Open Employment and Training Counselor, COIC.
We travel as a cohort.
Yes, right.
Yeah.
And then.
Oh, yes, and then online we have a couple of board members. We'll start with you, Gabe.
Gabriel Solis, Madras City Council.
And Carlos.
Yeah, good evening. Carlos Calica, Warm Springs Tribe, Vice Chairman, Tribal Council.
Welcome both of you virtually. Before we move into the service story, I just wanted to acknowledge all the challenges that have been happening in the region with fires. These last several weeks, I know that, there's probably in many communities, I think, that just had it kind of easy so far, and maybe to some extent Redmond. I think, communities like Pineville and Crow County and Sisters in particular, and Madras and on the reservation, it's just been really difficult. I imagine there's been a lot of fear, really hard work, lots of impact. And I know there's also been mutual aid happening back and forth between the region. I know last night we heard from the city manager and Ben that a lot of our firefighters went to a variety of different places to support local efforts. And some communities are finally getting the control over the fire and maybe starting to think about cleanup and next steps. So I just wanted to acknowledge what's been going on and how challenging it's been. And I really thank everybody for leaning in on the hard work, and especially all the folks on the ground who've been fighting the fires. Hang on there.
Thanks for that. I want to add to it real quick. There was a 4 o'clock call for commissioners around the state, county commissioners, because there are a lot of fires on the ground out there.
Yeah.
There's just wonderful levels of response that are happening. The incident management teams, some, just like I said, some of the big fires are wrapping up, or they've got control and they're starting to go down. People are taking breaks, but we still have another 6 weeks of real hot, dry weather expected.
Right.
Weather patterns coming and going. So we just got this, real detailed update. Weather patterns, when a cool front comes in, that means wind, which is bad, even though it's going to get cool. So a lot of moving parts still, but we do want to thank everybody out there taking care of business and defensible space. We always talk about it in Deschutes County, and everybody, just an extra branch off the tree next to your house, some needles in your gutter, the leaves in the inside corner of a spot at your house can be the difference between being able to survive or not.
Yeah,
Your structure.
I had somebody come out and do an assessment at my home, and that's some of the things we've been paying attention to. We've actually limbed up some trees. We actually removed a tree because we were gonna only limb part of it. Then it was being a lollipop and gonna get blown over. And we removed some bushes and shrubs that were too close to our house in terms of that. You own your zone the first 5 feet. It's all really important steps for people to take. And at least in our counties, Deschutes alerts. I'm not sure, actually, I don't know if that extends to the region or if there's a similar.
Deschutes alerts is the sheriff's office, but there's a statewide alerting system. But then on Central Oregon Fire, 888-777, or the other way around. Maybe 777.
Yeah.
But yeah, there's ways to get on the notification.
Just making sure you're on some kind of notification system, in particular for when something happens and you can know about what's happening in terms of potential evacuation. So I don't know if Carlos or Gabe, you have anything you wanted to add about the fire stuff.
It was a pretty good devastation to our tribal community. We lost six structures, and how the fire, it kind of brought in its own weather pattern. Seeing the firenadoes and all the things where it jumped the river and took off across up in the agency plains area. believe it's around 73 or 74% contained now. And, you know, we're thankful that no lives are lost, offering prayers to Spokane, 700 homes and businesses went down and just on that Saturday afternoon. And the devastation, we was actually up there in Spokane. We got stuck on that side Saturday. So, for the wind pattern and all that to happen on that day, and as well, all the resources that pull together, I'm really thankful to all the Central Oregon area businesses and community members that stepped forward to provide to our families that lost their homes. Unfortunately, one home or two homes didn't have insurance on them, but they were older homes. So the other ones were kind of working through with the home insurance to try and get their claims paid and get things taken care of. So I'm thankful to all the resources that come and put forth, and as well incident command to help fight the fires. It was tough the last couple of weeks, and the smoke's really hindering a lot of our community members right now too. So thank everybody for stepping forward.
And I'll throw in from the Madras side of things. Some of the fires definitely got close to Madras. I know at one point it was on the fence whether or not they were going to put parts of the city into an evacuation zone, which I know was definitely a concern for some of our community. I know staff members at both the county level and city level who were evacuated from their homes just outside of city limits. Actually, one of the evacuation zones bordered up to my own property at one point in time. So it was definitely a concern, definitely echo sentiments from both Commissioner DeBone and Councillor Riley from Bend. Defensible space, definitely important. And I'm going to kind of put Commissioner Taylor on the spot probably with this one, but he probably can speak to it a little better than I can. I just know that it was also very devastating across the state, but for ranchers and farmers, I mean, losing cattle, losing their hay, and just the amount of timber product that has been lost across state is just devastating, to a dollar amount, even more insane than losing homes. It's definitely going to hurt the state for, I think, years, potentially generations to come.
Yeah, I agree, and I apologize everybody for being here a little bit late, but I've been dealing with fire meetings, well, for a while now, but I was unable to attend in person because I just had so many back-to-back meetings. But yeah, it's there's some bigger, broader discussions to take place at the federal level and the state level with some of these fires. Bad fire year, we knew it was going to be. Unfortunately, some of our resources were not available to us, so we need to start looking into some of those dynamics. I don't like equipment sitting on the ground while there's a fire going and having our farmers and ranchers be the only ones fighting it without any federal resources or aid for 5 days. But that being said, it's not over yet. This is only really the beginning of fire season, unfortunately. We had half of our county burn last year and almost the other half burn this year. But we're resilient and we're going to do what we can with what we got. And our community is tough, and we're going to stick together and fight together and survive the best we can. Everybody's just got to be safe out there and be smart and prepare for these things before they happen.
I spoke to Commissioner Harmrick about 10 days ago, and I haven't spoken to her since then, but I know at the time when the fires were really erupting in where she lived, there was no resources that could come help them. They basically had to be their local, volunteers with the folks that live near her in a very rural part of the county. So it's interesting to hear the same thing, because it sounds like the resources were just so tapped out. I didn't really hear anything else but that. But
Well, one of the problems is when you have, and we don't need to get off on tangents or rabbit trails, of course, but I know I can be pretty good at that. But when we have, 8 different companies here, we have 8 different operating subcontractors here just waiting on the sidelines. They could have put out that brewer fire at 100 acres, but they have to wait to get the call. And we knew this was going to be a bad fire year. They knew it was going to be a bad fire year. So where were the resources at? And so that's the thing. The delay is what's really hurting me right now. We had too much of a delay on a season that they knew was going to be extremely bad. there should have been a quicker ability to release funds to get those private contractors up and going and off the ground instead of waiting for federal agencies. So it once again much bigger, broader discussion that we'll be having at the state and federal level about this. Last year they did a pretty darn good job. This year, which we knew was going to be an extreme fire year, I feel like they dropped the ball at the beginning a little bit, and unfortunately we had one of our landowners lose his life fighting over on the Brewer fire, and it's a tragic event that happened in our community. But anyways, I don't need to take up all meeting discussing that.
Well, so let's hang in there because we do have at least another couple of months of fire season.
Yep.
Okay, Jenny. Thanks for being here tonight.
Yeah.
We do the service story, so.
Sure. Yeah,
Yeah.
wherever you're most comfortable.
Yeah, you can come
If
up
you
here.
put your scissors- Go back.
Yeah, there you go, great. Yep.
Good evening. The service story I'll be speaking of tonight highlights the impact of our WIOA on the job training program, which helps connect job seekers with local employers while supporting the development of a skilled workforce. Through OJT, a participant is hired by an employer and receives structured hands-on training to learn the skills needed for the position. And WIOA funds reimburse the employer for 50% of the participant's wages, up to $5,000 during the designated training period. The employer identifies 5 key training objectives that are incorporated into an individualized training plan with midpoint and final evaluations conducted to measure progress and successful skill development. OJT provides a valuable benefit to both the employer and the participant. Employers are able to reduce the costs and financial risk associated with training a new employee while developing a worker specifically for their business needs. And participants earn wages from their first day of employment while gaining new occupational skills, experience, and an opportunity to establish a long-term career. Ultimately, OJT allows WIOA funds to serve as a strategic investment that supports individual economic self-sufficiency while also helping local employers build and retain the skilled workforce. So with that being said, our service story tonight is Chad. He is now an employee of Absolute Signs and Apparel here in Redmond through the OJT program. Chad was away from the workforce for several years. And he was determined to build a better future for himself and his children. As a single father and disabled veteran, he faced significant barriers to employment after leaving his previous position in the auto body industry in 2015. Although he had valuable work experience, he wanted the opportunity to begin a long-term career that offered stability, growth, and a livable wage. So as a result of a collaborative employer outreach visit conducted by the Workforce Business Services team and myself, Absolute Signs and Apparel was introduced to the benefits of the on-the-job training program for a production associate position. Shortly thereafter, Chad was referred to the employer as a strong candidate. And although he brought valuable experience from the auto body industry years ago, he had no prior experience in vinyl application, graphics installation, or operating commercial printing equipment. So through the OJT program, Chad received paid hands-on training while developing the specialized skill needed to successfully transition into his new career. Over the course of his training, Chad mastered 5 key competencies, including vinyl weaving, which I have no idea still what that is. Vinyl.
You can ask him.
It's
So,
first,
yeah.
you have to, go around the area.
Yes.
And then you trim it off. My husband has done some of that
Mhm.
side work, so I've watched him do it. I didn't get involved.
Seems very detailed.
Yes. Masking and vinyl application to various surfaces, mostly vehicles. Graphic removal and operating printers and laminators. His supervisor, Josh, consistently praised his outstanding work ethic, attention to detail, which I imagine you have to have for this position, communication skills, and willingness to learn. During the midpoint review, Chad was described as highly efficient, a great fit for the company, and someone who took pride in his work. And by the completion of training, his employer stated that they could not ask for a better employee. and noted Chad continued to improve every day. Chad shared that the OJTs exceeded his expectations by providing comprehensive training in every aspect of vinyl application and removal. He appreciated the clear instruction and ongoing support from his supervisor and expressed excitement about building a long-term career with absolute signs in apparel and expanding his skills within the manufacturing vehicle graphics industry. Upon successfully completing the OJT, Chad was retained as a permanent employee. His journey demonstrates how targeted workforce investments, employer partnerships, and individualized training can help job seekers overcome barriers, gain in-demand skills, and secure meaningful employment. And today, Chad is on the path toward long-term career success while providing greater financial stability for himself and his children.
Wonderful.
So we made a $4,200 workforce investment, which helped move an ongoing into employment, which will pay annually around $41,600. Within the first year, the investment will generate nearly 10 times its value in wages and estimated $2,900 to $5,400 in Oregon taxes and employment system contributions. So if employment is sustained for 5 years, that individual could earn more than $208,000 and generate between $14,500 and $27,000 in Oregon revenue and payroll contributions. So a potential public return exceeding 6 times the original amount. And I believe, if I'm not mistaken, his wage is $4 more per hour than when he started. So those numbers have probably will go up. So that is kind of our OJT program and success story within the OJT program. So if any of you know any employers or businesses who's interested in the OJT program, they can contact me. I'm happy to give them some information about it. Any questions?
How's the matching happen? Is in, if I'm an employee kind of stumbling around with some skills, there's companies that look for it. Does the employer kind of make a choice, or the employee look for opportunities, or?
It can be both. In this case, we utilize the iMatch skills system through WorkSource, the WorkSource registration iMatch skills. Again, I work in coordination with the business services team through WorkSource. So they work with the employer and employees who are seeking employment. So in this case, they ran a match and found Chad as he was kind of slowly getting back into the workforce. And because he had previous auto industry experience, it was kind of like a good transition for him. So that's how that match was made. But also, we also encourage employers who are hiring that if they have a direct applicant that they can contact us. They don't have to be a WorkSource customer to start with.
Thank you.
And are you covering part of the cost, the wage costs for that employee?
Yes.
Costs during the training period.
Yes, so we are through WIOA funding contributing 50% of the wages while they're being trained, up to $5,000. So.
Can you tell me what that acronym,
WIOA,
what it stands for?
Workforce Innovative Opportunity Act. It's a legislative funding.
Federal.
Funding. Mm-hmm.
There's so many.
Yes. So WIOA funding can be used for on-the-job training or occupational skills training as well for short-term training. We have a lot of people who utilize it for our most popular one is truck driving. Truck driving or medical assistant, for examples. But I really do like the on-the-job training program. It just, you get people back working and they're gaining new skills.
Yes, a lot of work and a great return.
Yeah.
Yes, exactly.
I just wanted to draw the board's attention to this is one of our programs that received a 40% reduction in their funding last year. And so if we look at the investment and the impact that small pots of money make to individuals, and then their children and what they're able to contribute, not to mention just the individual feeling that sense of connection again. And so as we work with EC Works, our Workforce Investment Board, they will likely come to us again, asking for a letter of support, wanting to encourage our involvement and making sure that we can keep the dollars going, and then additional funding as well. This was one of the departments that ended up with 2 layoffs. And so I also wanted to just thank the team, that I know that that was a significant impact to all of you. And I appreciated the way in which they handled that and stepping in to support one another. And the other is that this team also rallied to be able to stand up service in Klamath Falls, which has really high unemployment right now. And so at a time that we were doing reductions here, given some staffing and funding challenges, Klamath Falls was receiving funding, and we're standing up. And so it just was a very challenging time for this team. And I just wanted to say on behalf of myself and your support, thank you for how you show up and how you lean in and what you do to support each other and the community.
Can I ask the question, how lost 40%?
40% of the funding?
Yes.
So who wants to,
Sure, yeah, so the WIOA funding is federal funding, and so that ebbs and flows, but it's been kind of on the downward trend the last few years. And then there was some state funding that we had for a few years that we knew wasn't gonna get renewed, and nothing backfilled in that space.
So legislatively, when we look at the prosperity roadmap, and we look at workforce investment, and we look at employment, we look at business retention, this is a part that has seen a significant reduction at the same time that we are seeing these statement papers of the importance of it. So as this next legislative session happens, you all will likely get tapped and asked to assist in making sure that we can grow this part of the program to make sure that we can be the resource that is needed for our community.
Is there a way to calculate kind of the ROI on this program? I mean, we know the return on investment, you do recidivism, you get people out of the community, you return them to the workforce, they become tax-paying citizens. But do we know kind of what does that translate to in cost versus contribution? Because I think that's like, this is one of those programs that actually does work. I think it's easy to overlook it.
Sure.
I know Heather with EC Works, she had some stats pulled from OED and her Oregon Employment Department. Tracking that, I don't recall the numbers. I did see her presentation when she was supporting the prosperity plans, but I don't remember what they are, to be honest.
Well, and also, when people are gaining, when they're returning back to the workforce, they're getting off public assistance as well. This particular person had been receiving SSDI and just decided that he just, like I said, wanted to make a career and living for him and his children. So that's another probably return on investment as well.
Sure.
I mean, I know that's kind of it's not the most compassionate way to look at it, but I think everybody understands it costs X number of dollars in this kind of assistance. Now we have someone who's gainfully employed, completely independent. Like that is not only better for them, it's better for everybody. So
Yes.
there's not a huge lobby for this kind of service.
Correct, yes. We can see if we can get something or put something together. I mean, even if it's a high level estimate, yeah. Take our numbers and try to put something together.
That's what I was gonna say, yeah, Heather, Cascades Works, yeah, she knows all the numbers. When it comes time to lobbying state and federal, maybe a letter from this group can be helpful. So that'll come around in the next 6 months, probably for next year's legislative session.
Yeah, I mean, maybe having Heather come and do a 10-minute presentation with some Q&A about that kind of ROI question, the value of the program.
Join us remote.
It's kind of set up for.
Yeah, once you get her going, it's hard.
I know.
If we can get some pictures from sale.
Yeah.
Oh, there you go, yeah.
We know what it does, it's how to communicate it to them. So,
Yeah. And what does she need?
Yeah.
Yeah.
Any questions from the folks here virtually?
No, I think that these types of programs are fantastic. Whenever you can get people back into the workforce and off off the system. It's extremely beneficial. You know, my wife used to work for Youth Career Connect before COIC took it over, and she was putting kids into job placements and giving them training and stuff, and it's really beneficial, and it gives a sense of pride to the individual when they can have those skill sets built.
Well, thank you, Jimmy. Thank you. Yeah. So next agenda item is public comment. I don't believe there's anybody in the room make up public comment tonight, and as far as I know, there's nobody online, right, Kimberly? We can see everybody who's here. Okay. So then we're gonna move on to consent agenda. We have two parts. First, the minutes from last time. I was wondering if, looking over them myself today for the minutes, on, let's see, like page 4 of the minutes at the very top, that does not say staffing increase to 166.25 FTE due to the taking over of the transportation department. What did I suggest here? Transportation department bringing all Ben transit staff in-house. Just the Ben services doesn't make a lot of, it's sort of out of context. I mean, that's what we're referring to, right, specifically. is
Correct.
transportation
Yes.
stuff. So my suggested change is taking over, let's see, due to the transportation department bringing all Ben transit staff in. Great. That's all right. I think it's just a better, clearer record of what. Did anybody else have any requested changes or corrections? Okay, so with that, I would entertain a motion to approve with that one amendment.
I will move to approve the report from the 6th with the recommended amendment.
I'll second.
Second, great, so it's been moved and seconded. Any further discussion? All those in favor? Aye. Anybody opposed or abstaining? Okay, great, motion passes. And then the next would be a motion related to accepting the department reports.
I'll make a motion. Yeah, I'll make a motion to accept the department reports as presented.
I will second that motion.
Okay, moved and seconded. Any further discussion?
Just like to share, so my wife's involved with the Newbury Regional Partnership, so it's kind of a disclosure, no real conflict here. But like she was on the phone with the gentleman for the Civic Accent Project yesterday also. So she's just kind of perfectly involved, but she also does get paid through the Newbury Regional Partnership for consulting. But as I say, no conflict, just disclosure.
She's doing a great job.
Oh, she's excited about it too.
Right,
She's
we're
engaged.
excited too. Yep.
Okay, so I think so we have to vote on that one, right? So all those in favor?
Aye.
Any opposed? Great, motion passes. All right, so we're gonna move on after you're up already. Here we go. For a potential loan approval.
Lord, it's gonna be back to. Yeah.
Section time.
Just want to talk a little bit about where the loan program's involved on this one, and we haven't seen one of these in a while. So we have a real estate purchase where we're working together with the bank. Okay, this is really good for us. One of the goals of our revolving loan funds is to partner with financial institutions, whether banks or credit unions, to work in second position to help somebody with the finish line. Situations occur where there's either limited down payment, the bank wants to mitigate their risk by only wanting to lend X amount, and we come in and we fill the gap. We've done this in the past. We used to have another entity where we that worked with COICs called Oregon Business Development that did 504 real estate loans, and COIC loans would go behind it, or work with Columbia Bank, or some of the other banks that had different names at the time. So I'm bringing one here to us tonight where my connections at Washington Trust invited us in on a transaction here. Before I go down that one, I just want to remind you a couple things. Prior clients, Lolo Tree Works, you need tree or arborist, Lolo Tree Works we've worked with, Ben Landscaping, so some of the people we've worked with before. And I wrote down here Caliber Metal. If anybody's doing any kind of roofing or something, let's go to metal. So these are some prior clients, just let you know we work. So we currently have 2 loans on our books right now that deal with what I want to say, mental health care. Okay. And they've been great loans with us. We started those during the pandemic. One of the companies, Roots Renewal, that was a small $25,000 loan. Another one's Heartstone Therapy. They're up in Madras. And they've been great. Okay. So by presenting another loan in that same sector that we're working in here. So what we have is we have 2 women that have been in the business quite a long time in mental health therapy. Just some background on this sector of the economy is just growing. It's kind of gangbusters. If you know anybody that's pointed towards this career, it's just has great longevity, both from the standpoint of being in this career a long time and or capturing income and providing a fantastic service to people. So they've been over at Ben's Psychiatry, sharing office space. And one of them's been there almost 10 years and the other one about 18 months. And they decided to partner up and go into their own facility, which is over on 4th Street, right behind the Bank of America and the classic, I think it's called Rosax Steakhouse or something. It's been there a long time. So they're gonna
Very
be,
classic.
yeah, it's just classic to the core. The interior core. So there's a couple of attorneys in that office right now, and they went into contract here back in February, appraised in April at $695,000. So they're partnering together to do this. So what's great about my role here in working together with the bank is I get to look at their approval and go through our approval process. So it solidifies just, I want to say, the strength of the transaction when the bank's looking at the numbers we're bringing to the table, incorporating that in their underwriting. I get to look at their information, incorporating underwriting. We do some things that are different from the bank. It's the nature of what we do. And again, we present a loan of this size to the loan committee, which makes a referral back to COIC on how we would proceed on this one. So everybody was on board on the loan committee. We had quorum. I think 5 of the 7 members were in attendance, including 3 people in the commercial lending field. One of those being Lisa Kyle, retired prior COIC loan officer and capital advisor at SBDC, as an integral part of that committee. So we run the numbers, we look at the whole project. We say, does this make sense? We're working with the bank. What's our liability? How do we help this thing along? So borrower in this situation is putting down 14.5%. We're in the transaction 10%. We typically require existing businesses to have 10% equity in the business. If this was a new business, it might be a little bit different, it's usually a little bit more. So they're making beyond the minimum down. Bank's terms on this transaction are standard commercial financing terms, 7.25%. They write them as 5-year. They amortize it over 25 years, but they recheck the loan every 5 years to adjust the rate. COIC's rates are fixed for the duration loan. Real advantage we have that we let people know that our rates are fixed and there's no prepayment penalties. Standard in the commercial lending field, there's a decline in prepayment penalty. Okay. Actually, in Washington's trust case, if it's paid from the operation of the business, that would actually go away. But their loans recast after 5 years. We have what's called a balloon on them. So I want to explain this. This is very important to us that our revolving loan funds, the whole idea is for them to revolve. Lend them out, they come back, and we re-lend them in the community. At one time we were writing loans for 20, 25 years that did not have necessarily a balance due. So we decided a few years back just to say, okay, 10 years is lengthy. Get people bank ready. This is our whole goal is to fit in the slot that's not in traditional lending to get people to fully bank lending. So we have our loans due and payable in 10 years. So we go back into the fund and we'll lend them again. We look at the credit of the borrowers outstanding here, and we look at their investment which is called their net worth, or, you know, what their contribution in the business, that's substantial here. Okay, we're going from somebody that had basically no liabilities to liability of 2 mortgages, but the numbers are still fantastic. We look at what's called debt service. That's the ability of the businesses to support the payment on the mortgages. We go first and a second. In this situation, what's great is we have, you know, historic income. If we actually could go back 4 years, we went back 3, plus, you know, year-to-date profits and loss. And we look at the debt service numbers, and we look at it 2 ways on this transaction. We looked at it from the standpoint of the businesses supporting the loan, okay, which they can easily do, but the businesses are also the wage earners for their families. Okay, so how does this affect their lifestyle and the payments that they have, their other obligations? And in both situations, you know, we're an outstanding situation. It's over 2, I think it was 3, 3.5 on some years, gangbusters years on these projects. But it supports the payment of the loan. Just as a standard, just as a review, banks target 1.25% debt service, which means that there's enough income to support the payment of the loan plus a 25% cushion. Okay, so we way exceeded that cushion, which is good, adds to our security of this transaction. The bank's in first position. I want to talk about that for a second. It wasn't an issue with the loan committee, which I don't think it's an issue here, but let's talk about that. Is that we look at something called liquidation value. Okay, when we underwrite projects, if it's equipment or real estate, I've got a computer program that says liquidation value for real estate is 75%. What that means this: if there were a fire sale today, based on that purchase price, fire sale says you get out at 75%. Okay, which in this case is enough to cover the first. Okay, but gives us marginal to 0 to cover our second. Which at first, as I present that, doesn't sound positive. Okay. But I want to say that we look at these loans based on the ability of somebody to pay back the loan, the willingness to do so. So we have personal guarantees and we have business guarantees. So people are making, when I say guarantees to obligations that we've confirmed they supported their obligations in the past with the credit history. One of the things that's important, and we got into this a couple of years ago with Business Oregon, is we subscribe to what's called the loan loss reserve program. That is that loans that we can enroll in the loan loss reserve program, which is basically any loan, up to $250,000, they have a cap. They are insuring our capital, okay? If there was a capital loss, we'd go through a procedure that they would require, and it's based on the tiers of the total enrollment of the loan to replenish our loan fund. So I want to say that this loan, what we do with these loans is that we're collateralizing it, not just with the real estate second position, which I'm telling you, we're a little skinny on, okay, in value. If you looked at full liquidation today, but being in the loan loss reserve program, that's our catch-all coverage, okay? So it really puts us in a great position from that perspective. That's kind of what I've got about the loan. All the details are here, but does anybody have any questions? Yes, thank you, John.
First question, Washington Trust Bank.
Yes,
That would be regional VP Washington Trust Bank is on the loan review committee, correct?
yes, okay, thank you. Great question. I know, is this where this is going? Okay,
Where would you like it?
I would like it to go here. I would like to go here. I invite everybody to the loan committee.
Okay.
Okay. And I was clear with this when the memo was sent and the conversation I had with Corey Allen, who's on our loan committee, that Corey, jump in, participate, but you're not allowed to vote. Okay, so they have no voting. If they're involved in any part of the transaction, they're not allowed to vote. Sometimes they do get referrals from banks that don't do business with these people because they can't do the loan. They contribute from a voting standpoint, but they're.
I remember, because you said you had a quorum for the loan committee, you didn't say anybody recused, I just wanted to make sure.
Oh, okay,
So
so
he
yeah,
did recuse himself.
yes, he did.
from the vote. Okay.
Yes.
Next question.
Yes.
Next question I had, this talks about medication management, focusing specifically on anxiety, depression, ADHD, bipolar, substance issues and things like that.
Yes.
So aside. Do we know if this facility is going to be used for psilocybin? Are they going to be?
Don't, I mean, I said, like, you're saying as a facility being used, or are you saying that they, I mean, they have right, all the rights to
For this
risk.
person, and I don't want
Right.
to push her to bone, I know you guys kind of dove into this a little bit more.
So we had applications for psilocybin service centers outside of the urban growth boundaries. And we had a couple denials and I think an approval or two, but inside the cities, it's a whole different deal.
And I don't know what Ben's policy is on that. So
I think we're a business
I think
license.
we have one other than allowing our state laws, well, we haven't taken it, you got a
Yeah,
position
so
to
it's
focus
just-
on.
okay, that was my only question, because I know in Redmond, that's a hard pass.
Okay,
So I just want to make sure.
and I don't really understand that side of the equation in the sense of what those facilities are. These are mental health counselors. So
Well,
they're
but
working with
if
people,
They're
but
talking
yeah,
about prescription, if
Yeah,
they're
and they
prescribing
do.
psilocybin, if they're using it for treatment,
Yeah.
there is the new regulations that came out on that, but. I'm just asking, because like for us.
I don't know. There's like designations all over this place. I did research on these things. They get to do all these things with what they have to, but they legally conform to, you know, the state and the laws to do their business. Yeah, no doubt.
Are we concerned though of using the EDA funds to help purchase this building? Because those are.
Yeah, I'm not sure I understand the concern.
I guess my question is if it's not. I don't know, I don't understand the full legality of using psilocybin as treatment, and if we're using these funds for something that does have legal implications, could that come back to bite the organization?
So my first thought is that probably not. This sounds like psychiatry and, you know, mental health, stuff we do at the county, you know, all the time. So this is our health department, behavioral and mental health support. But that's just an assumption on my part. I don't know.
And I'm okay with that, I just
Yeah.
wanna make sure we're asking the question, just as, out of abundance of caution.
I mean, these kinds of services for, especially when you get into anybody who can work with medications, depending on what we're talking about, I don't know, it doesn't say particular they work with use, but especially for youth, this kind of services are, we don't have enough providers in our community. So, this kind of service seems really important to me, and nurse practitioners are highly trained, more than physician's assistants, and have, played an important role in delivering psychiatric care, as I understand it. And I would assume that if they were gonna be doing that, there's a whole different set of licensure and certification, and training, all that kind of stuff. So in terms of what the federal money is a problem.
I mean, we also have the LJC fund, so we did shut down the IRP fund and had about a little over, I think, $1 million go into LJC, and that's local funds. So if the board were to choose, to wanna fund this loan, and we can figure out the psilocybin and see if there's any concerns using EDA funds. If not, then we do have the LJC funds if the board.
With the,
Moving
so
forward.
what you're saying, is potentially it should into a different pool of money with all the exact same terms.
Correct.
Correct.
Yep, it's
It's not-
just no federal funds.
Nothing changes here.
No concern from your end.
No concern from my end. I do know this, that, you know, if this was, you know, marijuana related, can't do that with DEA funds. I mean, you couldn't have I don't wanna say distillery, but a production center that, you know, 1.01% of their output was for that purpose. I couldn't touch it.
Yeah.
But this, I think, falls under different things, but I can
We
follow
can
up
do
with
some
that
research,
and we can, you know, adjust that.
So we could adjust the resolution to say, directing staff to ensure that there isn't, you know, if there is any psilocybin restrictions, we prefer to shift it to the other pool on the off chance that this might be used that way.
We'd be
This building might,
Comfortable with that.
yeah.
So I have a question. The LLC is for the property. Do they each run their business separately?
Yeah, they both run their businesses separately, so they're 100% owners of their individual
That's what
business.
I was wondering if they were, you know, if they were a newly emerging practice, that's a little bit of a, how's that gonna work, you know, so if they're each their own.
They're each their own entity within the structure of the LLC, which they each own 50% of the building to operate.
The building part.
Yeah, and the other thing too, the building has extra office space that at some point they might rent out, you know, as they go along, but we didn't look at that at all.
Yeah, I love this program. Oh, I'm sorry, Mike. Mark.
I think, just a question, financial ability and all the different things. I just interested in the education of the individuals. And when I was reading about Mrs. Smith, Ms. Smith, I didn't know what some of the words were. Certificate of added qualification in psychiatry. You can nail down some of the things like Gonzaga, yeah, and the masters for the other reading. Right. But is this some of that OJT in there too, where they can do personal development on the job and be certified?
With it, I don't think so. Are you saying whether they would offer that
Or is that how she got to the level
Oh,
that she's offering for services in this profession?
They wouldn't be able to be licensed if they didn't meet the requirements to hold a license to be able to operate. So I suspect whatever they've submitted to the state for state licensing would be the backstop of whether or not they're approved to perform the responsibilities. So I don't know that,
licensing?
yeah.
I mean, they're fully licensed and I mean, it's certified under multiple categories, each one individually and one's a little different than the other, but. Long history of operating in their field, beyond those, initial educational components of the master's degrees.
This is kind of like acronym.
Oh, yeah. Oh, yeah, it's like, PH.
Get clarity on what all that means, no? The
One is
acronym-
trained as a nurse practitioner and one is trained as a physician.
Right, it's like mental health, do you want the acronyms now?
Not right on the fly.
No, okay.
We're good. Yeah, but if you wanted to, we're gonna do a little follow-up, I think, yeah.
Okay, yeah.
I mean, I guess another question would be if for some reason we discovered at some point in the future that they were gonna become a psilocybin facility, let's just make this up, the story.
Yeah.
Then could the loan not be renegotiated at that point if there was an EDA problem? And essentially pay off the EDA loan and then fund it through this other system. So maybe we don't have to do anything tonight.
Yeah,
Go forward with what we have, but just make a note for staff to let them know that, we don't think you can do psilocybin just in case you were ever thinking about it. And if so, you'd have to come back to us and we have to figure out how to change the rules.
We could have the facilitation of any federally prohibited substances. There could be
Yeah, right.
a line item where they needed to.
So, just to review here, so my research would entail, checking with our EDA counterparts
Yeah.
in Seattle, whether if psilocybin was a problem.
If it's one of those.
Is that an issue that they have on the EDA loan? And I've never seen any correspondence that it is, okay, but we confirm that.
Yeah.
And if it was, either now or in the future, we would have an alternative,
So we can stick with the motion we already have.
That's great.
Great.
On a larger scale, I like where you're going with the boilerplate language.
Yeah,
To,
that way it just.
to
makes it-
cover the weeds
Yeah.
that we're talking about
Yeah,
now,
and literally-
whether it's this or a future one.
Yeah, we may want for those funds that any federally prohibited.
Totally. Yeah, PHC or
Yep.
4-5 or what, insert
Yeah.
whatever.
Yeah,
And that also brings up, I mean, like I said, we have two mental health counselors right now that we work with, in our program. So I mean, I don't know that we'd have to, go back.
yeah.
I don't think that.
It is a different programming. It's usually a
is.
different business model. It's usually a very different.
Frankly, there's a lot of them are going out of business, they're
Yeah.
consolidating, there's a lot of problems with that system. And one of them is the financial costs and stuff, so it's been in the media some, so I'm not, my guess is not. None.
And same, well, I love this program, what it's doing for the economic development component to the community, and I like the underwriting with, that's in the second position. I guess my general question is related to the underwriting, although I'm not questioning anything that was done, it's just more general information for discussion if it's relevant. Was there any evaluation to determine what percentage of the business's revenue comes from OHP versus private commercial insurance versus out-of-pocket services?
So, to this degree, Margaret L, which is Lang, people by Lang, sent me, I would say her like hourly schedule for how she charges, okay? And she's newer to this self-employment. She was with Mosaic for a long time. And she says, Patrick, I'm balancing between, private pay, insurance pay, we'll say almost pro bono work and figuring this all out. But across the board, I mean, per hour, it's a couple $100 per hour plus. If that makes any difference, I don't know.
Is the question about the impact if we have Medicaid, changes in Medicaid, and whether they be solvent?
Yeah, so they're heavily involved with insurance companies, okay, insurance reimbursement. And I did go through the sequence of looking at the numerous insurers that they work with. I mean, there was at least 10, and definitely the ones that we have in town here, the Pacific Shores and the Aetna's, et cetera, et cetera. So there were a lot of them. And they kind of, work with all of those, so. But as far as things changing for.
Yeah, I don't have any specific questions beyond that, and I guess my only feedback would be as programs like this that have a revenue stream tied to other government or taxpayer funded programs, such as OHP. Is just to monitor the exposure that the fund has from COC taking in the general marketplace.
Okay, so let me go back, it's coming to me as I'm seeing this chart in front of me, most of the reimbursements were insurance related. Insurance related.
And I would expect that, and then it's a function of, okay, let's say 95% is 100% OHP.
Yeah.
Or is 50% OHP, but again, like, I don't want to.
No, it's a great question.
Weeds, I'm just providing feedback as to, might be something COIC looks at, because if the total portfolio starts to tilt in one direction, then the risk exposure could be greater if there are things outside of our control at the federal level or even the state level.
Yeah.
And this kind of gets full circle. So absolutely, in mitigating risk or future risks, important to understand that. So one thing Lang was contending with, as she's been in practice now a year and a half from her prior same career, is that she's managing those types of systems to figure out what works best. Ken Butler, on the other hand, has, far excelled that one. There's not much you could do to it's that one on. I mean, it's just solid.
Do they have employees?
No employees.
So they do their own billing, they do their own coding?
So we talked about this in loan committee. So what they've been doing over at the prior space is that they shared like a quarter of a person, okay, at the other space, or if there were 2 other providers at the other space. They'll be doing something like that between them, but they're using outside services, and I had referrals to one of them's in Arizona. It's amazing what happens nowadays between, automation, AI, offshore, whatever, all under the premise of, HIPAA compliant. We looked at the cost of that and it's minimal, but they're not expecting to have initially an employee when they start this thing. It's gonna be like full check-in on your phone. At some point, this goes back to, is they grow additional office personnel there. That's something they'll probably be doing, but we're not expecting.
And then I have one more question.
Yes.
So we got 50-50 owners. What, is there a structure in place to protect the loan or the assets if that partnership breaks up?
The structures in place are, we have business guarantees and we have personal guarantees, and that's what we do.
So what, I guess my question is, if one of the parties decides to default on the loan, are we gonna try to renegotiate? I mean, like.
Oh, no, both owners are 100%. Each individual owner is 100% responsible.
So if one walked, it's the equivalent of both of them walking, and maybe either the remaining partner would have to figure out how to reapply and qualify on their own, or it would be in default at that stage.
Right, let me present this too. I don't know if it was in here, but we talked about this in loan committee. Each owner can support the payment on independent. Okay. I'm blessed when I have people that don't have overhead in their personal lives, That's
Why doesn't it qualify for full financing through Washington Trust Bank?
So I talked about this with Corey, on the loan committee, and he kind of slammed me back a little bit here. I said, Corey, am I looking at this because of, the loan to value and your liquidation, and you're thinking about, mitigating the risk? He goes, well, Patrick, we look at that, but we also want to invite you into the transaction. Okay, so banking, as and underwriting is to, limit exposure. Okay, and that's why we play this role here in second position is we limit the bank's initial exposure to have something get through it. So they requested us to do it. We did it, or we're looking at doing it with your approval.
Patrick,
Yes.
is that how it typically works? The bank will reach out?
Well, I'm reaching out to them all the time.
Okay, so you're keeping that relationship going.
I'm calling them all the time. What do you got? What do you got? We see them at meetings and stuff like that. If there's something you can't do or we can partner in on. I mean, at some point, I hope to be partnering with Business Oregon on a transaction and we talk about that thing. So that's a role we play, volunteer ourselves. And that's it's a good mechanism for us to lend our money. Most of these, those transactions are gonna be either related to equipment or real estate, which is they have a high security value, especially real estate between those two. And yeah, it's just a good thing. I'm glad to get back in that game. So,
And I got one question.
yes,
Do they operate primarily on a referral program like so many professional services nowadays? And that helps them not have to have help.
they get it's like a referral system over there. They get referrals from insurance companies. They get referrals from other healthcare providers.
It's typically via referral.
They're, oh, as in like they're advertising out there?
There are people that they end up doing services that they're all referred to the people. That's the only way they can get into yours. They have to get a referral.
Oh, are they limited to just taking referrals? Is that the question? No, that referrals could be from somebody that's seeing them, has a friend that wants to see them, or another family member or something like that. So, but the majority of referrals are gonna be medically related or insurance related from other providers. It's the way that system moves.
Anybody else have any questions or concerns about moving forward on? Okay, so we have a motion on the PDF on page 24. Bottom.
Move to approve a COIC loan with TPIAP Holdings LLC for $69,500 from EDA revolving loan funds administered by COIC.
Do you have a second? So it's been moved and seconded. Any further discussion?
Any concerns if the motion has EDA in there specifically?
Well, I think what we decided is that they'd be able to renegotiate if there was something that came up with psilocybin or potentially marijuana for some reason. And then EDA funds can't be used, then Patrick would need to go back and figure out how to get them out of this loan and into the other pool that's unrestricted.
Right, it's more like a financial shift working with Michelle and other programs.
As long as the board authorizes that?
Yeah, you have to come back to, come back to us.
Okay.
Go, get reauthorized.
Yeah.
So I think we're okay there, but so, we have a second, so I think the instruction could be for staff to just research that and know that, if we have to face that, be ready to kind of have to pivot. And sort of making sure future customers who we might think, are potentially thinking about something like that to educate them up front.
Yeah. Yep.
But, and please communicate with the applicants, the providers, because that may not even be their world at all. Why are you asking about that? So let's make sure to get clear before we go down a path of assuming anything.
Yeah, that's a
Professional.
Yeah.
Okay, so, all those in favor of the motion?
Aye.
Anyone opposed?
I'm going to oppose it. I know I didn't speak much on it at all. My comments were already kind of made by others in the room, so I'm going to be opposed on that one.
Okay, so one opposition vote. Carlos, are you in support of this?
I think I heard an aye, but we
Okay,
would want to check.
That was an aye.
okay, great, thank you, Carlos. Okay, so I have one opposed and the rest of the board members present tonight voted. All right. So we're gonna move on then. Thank you, Patrick. Hey, Patrick, I think one other thing actually I was thinking about in this, I think in the future where we have somebody on the loan committee who maybe has a conflict and doesn't vote, that ought to be noted in the materials the board gets.
Yep,
Yeah.
let's
Just make a point, just make sure. it's
Thank you, thank you, thank you.
Good process. Okay, do you have anything you want to start with, or do you want to? So this, just as a preamble, so you all have approved the budget. You approved for us to, yay, you approved for us to.
Is there any audit work to do right now?
Oh, no.
Very
No.
Yeah, on the ground, very proud.
So, we are on track for being able to complete our audit this year on time. We are caught up officially, we have been, which is great, all is well. Thank you again, Michelle and your team. That's her new four-letter word is audit. So you asked us, we presented to you some class and comp information at our last meeting. We talked about the ability for us to make some improvements in terms of the ability to get some of our out-of-market positions closer to market. You approved us to make a 1/3 adjustment, and then you asked us to come back with some other associated benefits that are not related to the actual wage, that we could do that would impact in a good way our team so that we can continue to be marketable and a choice employer, and what might that look like. So thank you to Michelle and to Hannah for your teams. Michelle ran more sort of calculations of ideas than she probably wants to admit, and Hannah and her team came up with a very interesting list of things that communities and businesses are doing across the spectrum in public service to offer some benefits that are outside wage to their employees. So we have winnowed that down. They also looked at the research behind which ones are most favored by employees so that we have an idea of what that looks like. And then also what we've heard from our own employees in terms of what they're looking for. So they're gonna present to you the recommendations. So just know there's a lot of work that went on behind this. And so they've winnowed it down. And then we've been able to identify how we would pay for this on your behalf. And I'm really proud of the team in terms of how they went to work to present this for you. So the recommendations, please. So thank you. You can go to the next.
Before we go into that, just Tammy, can you enlighten those of us who were not at that board meeting? What prompted the board to direct staff to go look into this and move in this direction?
You bet. So we presented a balanced budget to the budget committee, which is what is required of us. That did not include a cost of living adjustment. It did not include adjustments to class and comp. And it also did not include adjustments to other areas in which we have wanted to make improvements in our benefit packages. And so we know that we've been under market in terms of vacation offering. We've been under market in terms of accruals, if you will. And so the board said after the presentation of the class and comp, we'd like you to make 1/3 of an adjustment to, which was what they felt that we could afford, to get those positions that are below market toward closer to market and to our philosophy in terms of where we want to be in terms of compensation. And so the board also said, what else would you do? Because that does not impact every employee, and some employees are not actually impacted with being able to receive a merit or cost of living increase because their positions have been identified outside of market. And so they gave us a bit of a budget of around 184,000 that we could work with. And so what we are presenting to you tonight does not include what you've already approved in terms of that 1/3 coming toward closer toward market, but it does include those other associated benefits that have a cost that we would like to make improvements to be more marketable in those areas of other benefits such as vacation. How did I do in
Perfect.
summarize? Okay, okay.
Nope, that makes a lot of sense. I appreciate it. Apologize, I wasn't here when the board was going through that, was dealing with other things at the city, so wasn't able to actually be at that meeting, so.
Totally understand and happy to provide the backcast.
And for those
Thank you.
online, as we're in presentation mode, we're not, I mean, you, Kimberly can see, so Kimberly will let me know if we raised any.
Okay,
All right.
we'll do that moving forward. Sorry, Chair.
Okay, so we'll get to our recommendation here in a moment, but to start, thought it would be helpful just to recap some of the goals and considerations. I think we touched on these quite a bit at the June meeting through the discussion around vacation and all the different things that we were talking about in the benefits packages. For the main thing that we're looking at is really that market competitive element, wanting to make sure that we're targeting that long term. Also considering what's the impact to the organization and what's the value to employees. So Tammy touched on this a bit, but through research and through just information that reaches us, employees are really valuing pay, time off, and flexibility. And so you'll see that theme show up throughout the recommendation that we're making. And then also looking at the short-term, long-term approach here, we are making movement towards being closer to market where needed, but that will take time, and we understand that that will likely phase over the course of to be determined amount of years. And so we're wanting to look at what are some short-term things we can do to really be strategic now, so that we're not falling further behind, or that we're making movement where we can towards those more long-term goals. And then last but not least, we also considered administrative burden, if you will. So all of these employee benefits concepts do take time and effort to implement, track, manage, to do that equitably. So wanting to make sure that we're just being mindful of that does translate it to a cost, and we want to make sure that we're putting money into hopefully reaching the employees and not necessarily big overhead administrative functions. Kim, next slide, thank you. Okay, so this is the package. We'll be going into each of these in more detail, but wanted to give you a chance to see what the main 4 things were. So the first would be adjusting accrual rates for vacation, also making some changes to the vacation cap to lower it, and changing some of the cash out rules. We had quite a lengthy discussion about that last time, so we'll be revisiting that.
So you'll see some of your ideas in this too,
Yeah.
which is the whole goal.
Yes. The next idea is adding 2 personal days or floating days. We'll talk a little bit about the why on that, but essentially that would be to complement the time off element, add more flexibility for employees, and rather than vacation, it's a little bit easier for us to administer without the same cost and cost liability associated with it. And then also recommending a longevity increase. It would be doubling the base rate. Some of you might recall our longevity rates are fairly low to start and have been that way for a while, so they're just a little bit dated. And so this would be bringing it more into a little bit more up to date and a little bit more impactful for employees who are receiving that with the intention of having retention with employees. And then last on that list would be a new category of leave for director positions. Sort of similar to the personal day concept. This was really a strategic approach. We are recruiting for a director right now. We understand that we may be really competing with other organizations for attracting people into that type of key leadership position. And so anything we could do that has a low cost to it, but helps us be more marketable in attracting people to the organization is helpful.
It also helps us with solidifying some of our current practices.
Yes. Yes. Okay, so a little bit closer look at the vacation accrual. We currently have these tiers that are listed on the side. We felt that that was close enough to what most organizations are doing and what employees expect. So we're not recommending any changes to the tiers, but we are recommending an increase after 5 years. And so it would go up by 2 hours each tier. So for example, currently after 5 years completed, you would be earning 10 hours a month vacation, and we're recommending increasing that to 12 and so on. That, oh, thank you. That is more comparable to other government and public sector organizations. It's not the highest, but it's not the lowest, and we felt like that would be a good move for us to make.
And we implemented the 40 hours after 90 days last year.
Correct.
Was that
Yes.
an improvement?
Yeah.
So we were just at a standard, when you were hired on, you received no vacation. You just start with your accruals for your first 5 years. And that was well below where our counterparts were at. And so we made that improvement as well, but this sort of ties it together just as a sort of historical perspective.
Yeah, and that did, I think, help us with landing people for job offers that maybe were right on the fence of accepting, so that made us a little bit more competitive when they came to vacation time. Before I get into the cap and cash out, are there any questions about any of the rate fees?
I have a question on the 0 to 5 year.
Mhm.
So we're looking at basically 1 week of vacation, if I understand that right? 40 hours.
So, for the first 5 years, the employee would accrue 8 hours per month. And then in addition to that,
Plus 40 hours.
yes,
Okay.
they are front loaded with 40 hours, essentially on their 90
Okay.
day.
Okay.
So not their very first day, because we want people to start working and get trained and that kind of thing, but after 90 days, we felt was enough time where we could allow that bank to be
No,
front
that makes
loaded.
sense.
It also has a cash value. So we're taking that into effect or into account as well, that if someone were to work with us for a month, they would have that cash value equivalent. This sort of mitigates that. We've got them in the saddle. They're halfway through their introductory period and things are,
Yeah.
just a bit more commitment.
I'm glad you clarified that, because right here,
It's a great
mine's
question.
going like this. and
Yeah, it's a great question.
Very happy of it.
Did you have a question, Catherine?
Did I have that on my face?
What?
She's HR.
Kind of thinking what you were just saying, Tammy, about you're looking to be competitive, right? But this is across the board, right, for all employees and
Not union represented.
not union represented, okay?
Entirely different, yep.
So out of the 160 plus, how many are we talking that are?
68 are non-represented.
68 non-represented. And when you talk about trying to be market competitive, those 68 all have different types of roles.
Yeah.
There's really not a lot of comparison to COIC as an organization out there. So were you going out to like the specific role to trying to look at the market and compare it at that level?
We look at local government, we look at other councils of governments. And so it's primarily, we try to look at life-size organizations. So Redmond's a pretty good counterpart to us. We look at Sisters, we look at Prineville, we look at Bend, we look at Stutes. We know that we have 200 employees. And so, or 166, and we're, hiring in certain areas, and let's just call it, we look at life-size organizations, and then we also know what can we actually sustain. And so we know that we won't be able to be as generous as some. We also know that so we're also providing one-time changes because we are recognizing that ongoing cost that a local government with a tax base, which you all have, we don't. And so we want to be able to adjust where necessary if we need to maybe have a year where we don't offer some of this. So it's a combination of all of the above. I'm not sure if there's more that you would add, but we typically try to, our counterparts would be local government. And then we have 5 other councils of governments that we look at too.
But for the class and comp, position by position, we did actually look at.
Oh, sure.
Yeah, so that was.
Yeah,
where
a little
it really
different.
Broke down granularly on the class.
Right.
Comp, is that the class and comp? Yeah, so we looked at how competitive are we compared to wages of others with that similar position. We did break it down really quick. Okay.
Excellent point. So teachers,
Yeah, that's.
none of you have teachers in your local governments. We do. So we then look at the school districts, we look at big, we look at small, we look at for some of them, we're trying to find the right counterparts there. Transit, so many of you don't do transit, so we look at other transit districts, Rogue Valley, Lane, those are similar to us. So in terms of the job specific, it's job to job. For this, it's sort of organization wide. So, and there's no template, so if you have other ideas, we're.
I think Counselor Solis, do you have a question?
Yeah, not necessarily a question, but more of a comment on the 40 hours after 90 days. Something that COIC might consider, and I would recommend considering, is instead of offering that after the 90 days, front loading that right when an employee starts, but to mitigate that financial liability that's associated with that, recognize that if they terminate any time within their first 5 months, which is what would basically be their normal accrual, they don't get paid out. So essentially, you're saying, hey, here's your 40 up front. You have it because life happens. You might have a concert you're going to this Friday in Bend, and you don't want to have to miss it because of work, but you don't have any time off on the books. So we're fronting you that to recognize that. But hey, if you quit, we're not paying you out for that 40 until you've given us at least 5 months worth of service. That is a way to mitigate that fiscal risk associated with fronting the leave while still recognizing that, hey, they're people, life happens, and they have other things they'd probably rather be doing than working, right? And that's also something my employer does as well. They front it, but if you leave within that time frame or are terminated, you don't get paid out. So there's no cash value to it. It's purely time off value.
That's really helpful. The other thing that Counselor, that we have implemented is that we ask, do you have time off that you have already committed to? So we can work around that intentionally before people start, because we were finding that people, they forgot they had a wedding they were going to. We've had some that forgot they were getting married. And so we're sort of like, you need to plan for these things. And so I appreciate that feedback as another option for us, because we've been finding, so then we're giving unpaid time, or it just became really clunky. So that's good to, as an input. Thank you.
Yeah, absolutely. And as processing payroll within my department at my employer, it definitely makes it easier than having to deal with unpaid leave, because then you get into having to prorate benefits and it's a manual calculation. So fronting employees that not only is more beneficial for the employees, for their morale, but it's also more beneficial for internal staff who are processing payroll. It's less work, just less time consuming to review and process that manual check versus, hey, they've got the leave, they can use it.
My only concern with that is that you do run into the potential for an employee to leave kind of in the hole for vacation time, and is the organization prepared to beat that cost? Because you're not gonna recoup those dollars.
Sure.
If they leave with negative 8 hours. Right?
Yeah.
So.
Yeah, I hear, yeah.
I don't necessarily
Give and take,
disagree with it. I think it's okay. I just make sure that we're weighing that as a possible cost.
That's a very good point, because that is definitely, I think, the risk associated with my suggestion would be they burn those 40 hours in their first month and then leave. At that point, there's nothing we can do. We're out to that. Hopefully there's some level of integrity with the employees that we hire as COIC, but that's definitely a risk. Good point, Counselor.
Part of what you're suggesting, Counselor Solis, is that those 40 hours are essentially equivalent to their first 5 months of earnings of accrual, right?
They'd still accrue as well.
Right, but so are you saying the 40 hours is on top, or you're front loading? Because this is on top of, right?
My recommendation would be front loading, not on top of.
Yeah, so he's saying you're giving them 40 hours on day one, but they still have to earn that. So if they use 8 of it, then their first month it's used right. You're deducting off of that 40 for the first 5 months.
Oh,
so they actually have vacation to use right away. That's what he's saying. That's what simplifies the whole thing.
I see. Okay.
So it's not adding extra. You could still be doing this extra. It's how you deliver the first 5 months. The first 5 times 8 is 40.
Yeah. Yep. Okay.
Yep, that's exactly it.
Yeah.
Okay. I think it's
So if they forgot the wedding, then they've got some time there that they can use it. And
that one was sort of like, wait a minute.
Yeah.
I think it's a very interesting idea. There's some things we would probably want to look at on tracking the vacation that has cash out value versus what might not have cash out value, or coding things, but other than that.
Okay.
And I just want to be conscious of time, so just keep us moving along here. Because we have a ways to go through this still. we're very engaged on this, which is good.
Yeah.
But we want to get out of here on time.
Yes, so let's talk about that vacation cap. We are recommending, so part of this, this package of recommendation is to really talk about work-life balance. We want to encourage employees to use their vacation, not necessarily wanting to hold on to it and then cash it out, although that is an option we currently offer. We really would like people to be able to take their vacation. And so we did propose a reduction on the vacation cap from 320 to 280. Not a huge jump because we don't want to make a drastic change there, but it helps a little.
And it's in line, we did look at other counterparts of who's doing what. We were on the top end, for sure.
Yes. And then the cash out options, currently we allow 6 times the monthly accrual twice per year. So that is quite high. If you had somebody who was accruing, you know, after 20 years, 16 hours a month, they could cash out 96 hours. We are proposing that we go down to 40 hours twice per year. So the maximum anyone would be able to cash out in a year would be 80 hours or 2 weeks of vacation. So this would be coupled with the increase in vacation rates. And we do have a minimum balance, so we don't have people running out totally to zero on their vacation just to cash it out, that type of thing.
So they have to be at least 160 to cash out 40.
Yes, correct. Has to be 120 left after they cash out.
Okay, excuse me. So we're talking, they could basically not take their vacation and get paid for 40 hours. Is that what you're saying?
Correct, yeah, twice a year, we allow the option. Not very many people exercise it. Most people are, I would say, wanting to take their vacation throughout the year. But for some people who have been around a long time and have a higher balance, they are taking their vacation throughout the year. They've sort of saved that up and also cashing out.
Okay.
With their mental health, is maybe a use it or lose it policy better to kind of force them to unplug for a minute?
Part of it is the balance between, we were really under staffed. And we didn't have a lot of opportunity for people to take vacation. And so part of it is the capacity piece and being able to balance where you don't, I wouldn't want someone penalized because they're needing to step in. Where the organization has been very, very lean in years past. And so some of our longer serving employees really got those banks up. But we do have a couple that sort of do that. This will help to incentivize taking your vacation. And because I feel confident that we are now outside of an absence because of a medical something, you know, where there's something, an extenuating circumstance. We now have the capacity for folks to be able to take vacation.
Well, and I've been in situations where it was a use it or lose it.
Yep,
So.
yep.
Not, you know, I'm not fault for that. That's crazy talk.
I think we may have virtually, I'm not sure, is it Counselor Solis? Okay.
Yeah, sorry. Finance payroll things kind of my jam. So this is where I kind of get really involved with things and probably annoy everyone else. But on the cash out options, as far as doing 40 hours twice per year, that's great. I think another way that we could help mitigate some of, again, that financial liability of that is have a requirement that they have to have used at least 40 hours in the year in order to have that buyout. That helps reduce the potential impact because not everybody's going to use 40 hours before doing a buyout. It's not perfect or bulletproof, but it just helps reduce that potential fiscal liability because if we're already paying them for a work month, but now we're incentivizing them to use those hours so they can get a buyout later. It's not an additional cost to us at some point in the future. So that would be my recommendation with that, is that we drop it to the 40 twice per year, but require them to use a minimum of 40 hours in the year before they're eligible for that buyout.
Great.
What is the policy on accruals if the employee is terminated or leaves on their own accord?
So our current policy for vacation is that it is paid out in entirety.
In both situations,
Yes.
whether they're terminated or.
Yeah,
Up to the maximum cap of 280.
right.
It would be.
Correct, yeah, that would be the most they could have on. on their bank to need to be cashed out, right?
And we were learning that some organizations do not allow that. Some organizations do not allow cash outs, some organizations. So it's really across the board. We're trying not to make
That-
too many
Peer organization.
peer organizations, yes. So this is, it's a bit of a balance between too much change at once. I think the cap was a great idea, in terms of reducing that a bit. It also reduces our outside exposure. And I really like the idea where we want people to be taking vacation. And so we want people to be using it too. So sort of,
What's driving 104,000 for year one, the cost there? Because I'm assuming that means true extra cost above and beyond sort of what you're paying somebody for full time. And even taking part of that full time
It is.
as their vacation. It's.
Yeah.
So what drives that?
So that's basically, so every month
Okay.
when employees accrue vacation, that's an expense to us on top of their wages. So if I don't take any vacation for the month of August, you're gonna have my base salary, all my bennies, plus you're gonna have my cost for my vacation, and it goes into a liability account. So as my liability account or my vacation accrues and I earn more hours and I'm not using them, every month there's an expense for that. Now, when I take vacations, so say September, I take off the whole month, right?
and then I leave.
Sorry. All of my wages for that month are actually gonna come out of that liability account. So as long as employees are using their vacation, you know, it's not really. It kind of averages out and weighs out, but if you have employees that are not using their vacation. And technically just banking it, and then eventually we have to pay that out, whether they leave, whether they're termed, or whether they cash it out. You know, that's cash out the door, so it is expensed every month. So that's the 104,000 is the approximate cost, including the roll-up cost, so not just the 2 hours increase base wages. You've got to talk PERS, you've got to talk employment taxes, all of that stuff that rolls up into that.
So it's really driven by the change then in the 2 hours. It's
It's
the other
correct.
two are actually adjusting that balance you would be carrying down.
Yeah,
Yeah, we didn't really factor that into the cost also, yeah.
No. yeah.
So we will have some buyout if you decide to implement this. So we do have some that are at 320, and then they sort of just keep themselves, they take a day or an hour here or so to keep themselves below that cap. So we're gonna have some, but it's not, I mean, again, we've already banked for that, and so
Yeah.
we would make everyone whole and then start again. So we wouldn't grandfather, we would just say, we're gonna cash you out to this, and then have them be at the new cap.
If we're gonna do that, and if we're gonna implement the, you have to take 40 before you can sell 40 rule. Do we really still wanna have the ability to sell it twice a year? Cause I think we're kind of forcing people to take off early in the year so they can get through the 40 hours so they can sell at the first part of the year. And are we gonna make them do another 40 before they can sell a second time? Or are we gonna say you can take 40, but then you can sell 80, you just have to do it in 2 separate chunks?
I think it's one time of using the 40. And we have maybe 5 individuals in our organization, including union represented, that cash out. So of the whole cohort, we have very few. And we have more earn it and it's gone than we have of the banking.
Yeah.
So when we look at, as we're making these adjustments, the impact is really minimal because we have looked at where those thresholds are. We're very much on the side of making sure people have something versus that we're worried that we're gonna have big cash outs.
That's kind of what I was wondering is like how many people are
We're really
very
holding on. Less than 10.
And just from a organizational standpoint, financial standpoint and all of that, I mean, it makes a lot of sense because when you do want people to have their rest, you do want your organization to, you know, you have to find out how it is with somebody gone.
It's
You know,
been
to
great.
appreciate their job that
Yeah.
you're doing.
Yeah.
My brother-in-law was gone, I was doing part of his job, I really appreciate him when he comes back.
he
And
probably worked a
then,
lot.
and then the money part of it.
Yeah.
That's a huge liability to have all that on the books, so
Yeah.
I think all around it's a good idea to kind of make people use their vacation.
And we
So
can
what-
revisit too, so we can
what I'm gonna ask is that, and just ask for a thumbs up or thumbs down on this real quick, but just that if we have support for this generally from the staff recommendation, and that would ask the staff to consider the two topics that have come up, front load, and changing the cash out and whether you have to do 40 or not, and let staff make the final determination on that. I mean, I think it's important, and these are really good pieces of input, but I think it's probably best for us to let the staff maybe make some final determinations on that.
It does that.
Thank you.
Okay, but-
100%.
Alright, so do I see thumbs up generally for what's proposed here on the vacation side?
Yes.
Okay, and we seen that from online as well?
1 of 3
Uh,
so far.
I'm gonna disagree with that. I think that it's important that we as a board are the ones making the decision as far as benefits and policy and options on that, not necessarily that staff do that. I definitely recognize, Chair, that you want to be able to move things forward for the sake of time, given that we're almost at the end. So a recommendation might be that we don't take action on this tonight, but that we continue through the presentation, we receive all the information, and then it's dispersed out to the board members so that we can provide feedback and it comes back to us at our September meeting.
With a final recommendation considering the input tonight? Is that what you're asking for, Councilor Solis?
Yeah, I think considering input tonight as well as input that we submit as board members over the next month.
I understand, but that staff would consider that and then bring it back to us one month.
Correct, yes.
I would push back on that only because of the number of months that you have been now going on with this. I mean, we started this before budget. We are now through budget and we are now several months past it. I think it is fish or cut bait, is what my grandfather used to say.
Yeah, so the staff, do you have any reactions to it?
I have well, if, for the vacation piece itself, if it would help to have a solution on the using 40 hours in a year, my thought went to maybe 20 hours for each part of the year. It's a simple solution where we divide it in half and it makes it easy to track. So if there's an option, if that would help get to agreement, or if there's other questions or concerns, of course, happy to look at those as well.
That is absolutely something that I'm fine with. I'm totally fine with it being 20 and 20, as long as we're incentivizing the use of it. My comments were purely because it sounded like, and maybe I'm mishearing, Chair, but it sounded like you were wanting to kind of reduce comments, reduce discussion on this as we move forward through the presentation from staff, and then potentially make a decision. And I think it's important that we be able to really discuss this and see what it is, because it has a true financial impact for the organization. And I don't want it to just be, hey, staff said this, yes, we're good with it, move on. So if that's not the case, then I'm good to move forward.
Okay, and then what about the front loading piece? Do you all have a?
I kind of like it as they have it, as it is on this slide.
So you'd be recommending that we keep the 40
Keep it.
hours after 90
Yeah.
days?
Yeah.
Administratively,
It's
seem,
to do which,
it does seem simpler, like it might make administration simpler to do the front loading, is the way the council still being proposed.
oh,
40 hours is from the beginning. There is a risk there, if somebody uses it all before 5 months, then you've kind of lost out, but
sure.
it's not that significant really. It does kind of a benefit, so they're not earning more. They just from day one have those 40 hours. But, you know, they're not earning it really for the first 5 months. They start earning more in month 6.
I don't feel strongly either way. I think either would have a couple administrative adjustments.
Okay.
With this option, we don't have to track whether it has cash value or not, because after 90 days, it has cash value. So that's easier in that way. But as you said, the other option has sort of the flip side of that, so.
and Hannah used to be our payroll specialist, and now she's HR.
It's
so
very
she
doable.
has been on both sides.
Yes, it's very doable, either option.
Yeah.
Yeah.
So it's really, where would the board like us to be?
So I
Sounds
people would support that, the front loaded essentially. It's not changing the total amount earned. I people, yes on that.
Yeah.
So I have myself, and I think Councilor Solis and.
Commissioner Taylor is also thumbs up.
Maybe in the middle.
Yeah.
So we're
Like
roughly,
the idea,
we're
got
roughly,
concerns with the termination section.
roughly split on that one, so I say let's
I think
just-
90 days.
let's leave this as proposed.
Okay.
Let's leave this as proposed. I know that that's, what I'm trying to do is not have us come back and have to revisit everything we just talked about. That's why I wanted to get agreement on this slide, because we have 3 more to go through,
Yes.
right? So I wanted to get agreement here and then we can move on. So we're gonna leave the proposal in terms of how we deal with the first 90 days and how you accrue. But we're gonna go forward with the cash out options, but they have to use at least 20 hours before they can take the 40 as a cash out. And then that's also true for the second.
Thank you.
Okay.
Yes, and I'm happy, we can always make more positive changes for the future too, so this
Yes.
gives us a way to move forward.
Oh, yeah. Yep.
All right, so let's go on to the next piece.
Okay, this one should be a little shorter, personal days, this would be a one-time approval only for this year. The reason why is we don't want to sign ourselves up for too many ongoing potential expenses. Although this doesn't have exactly like a liability cost like Michelle was talking about, where the accrual actually has to be put into the accounting system. We do want to just be mindful of having people gone from work does have a cost of coverage. This would be 2 floating days, no cash value. It would be use it or lose it this year. For those who are detail oriented, we haven't quite determined calendar year, fiscal year, but we can talk about that. And then, again, really looking at like the short-term value, we understand that this year we're going to be going through a lot of changes with employees with some of the classic comp and implementation, wanting to make sure that this would impact all employees, everyone would receive it, show appreciation, and then just offer some additional flexibility for staff.
As a reminder, we did this 2 days for COVID and it worked really well for us to be able to track.
Yeah, we just add a new code, it goes into their drop down, it's very simple. Yep.
Now, my question, I'm sorry, devil's advocate, but the 2 personal days, there's no cash value, so they're taking without pay.
No, it would be paid time. It would be.
Okay, so, but that means there is a cash value.
So go.
Sorry, just that if they were to depart the organization, they would not receive any compensation for those hours, unlike vacation which.
Oh,
is
okay,
paid out.
okay, yeah, totally get that.
Well said.
Is there a separate leave bank that is separate from the time off in these 2 personal days?
Sick time.
Sick time.
Yes.
And is that 40?
Sick time accrues at 8 hours per month. So we are above what Oregon law requires for accrual. We don't, that would be a lower rate. Ours is higher than that.
So 8 hours per month.
Right, for sick time.
And it doesn't escalate
Yeah, it doesn't escalate.
with employment duration.
That's 96 hours a year for sick time.
Wow.
And then how many?
And that's a use it or lose it.
Understood. Yeah. How many holidays does COIC recognize?
11.
88 hours.
And are those,
Yes.
So just in year 1, it's 96 hours of paid time off, 40 hours of sick time, 16 hours of personal days, 40 hours of. It's 96 hours. Do you have a total?
I don't, but we could, yeah, so 96 of vacation plus the 40. After 90 days, 96 of sick time. Thank you for your calculator.
Yep. Without this trusty iPhone, we'll see if it works.
And the 2 personal days, if we add these plus 11 holidays.
Being a small business.
It's a lot.
2 personal days, so
Yeah.
sorry,
Yeah.
16
And
hours.
again, think that we are trying to get to the market. I mean, so we're already. Yeah, so yeah.
336, but for sick, you're assuming that, and again, it varies, but you're assuming that employees are validly sick 1 day a month, and that's not always the case. So there is no cap on sick time, it's also no cash value. It does grow, but there's only certain reasons you should be using sick.
Yeah, I don't, like, my observation here is when we're talking market, we're comparing government to government, and my comment here is not related to what COIC employees deserve or don't deserve. They deserve more than what they're getting, as do most people working. My observation is related to the sustainability of the decisions that are going to be made on this revolving topic. Knowing that for every government funded employee that gets more, it means the private sector pays more. And right now, the private sector market is responding in the state of Oregon with job losses to these very decisions. And so I don't know how we as a board and as a community reconcile this hard thing. That I'm not attacking the logic of the information being presented. I understand it. It's a very difficult thing because every organization, public, private sector, was in a labor shortage in 2020, 2021, 2022. And we're trying to develop and implement policies to prevent that from happening from an employee retention and recruitment perspective. It's 60 to 70% of the people that I personally know in my recruiting field right now, their exclusive goal is to become a government employee in the state of Oregon with a local government jurisdiction. That means they're trying to exit the private sector because it's contracting right now. So is it possible to do this right now in this year? Sure, you've already run the numbers, otherwise it wouldn't be presented. Am I gonna vote to pass it to support COIC? Probably. Tammy, you, Michelle, you, Hannah, you, like this is a really challenging decision and there's not there's a handful of private sector employers I personally know in Central Oregon that have cash payouts for unused balance, literally a handful.
Yeah.
And they're the top 4 employers in Central Oregon. Everybody else is employed by a 15-person small business. They don't have 313 hours a year.
Yeah.
So I don't see how it's sustainable. Whatever decision is made in the current state or the proposed state, the revenue from the private sector is declining.
Yeah. So is our grant and contract revenue.
Right.
Right.
Yeah,
Yes,
so
I
the
mean,
decisions are
economics.
made and the people that benefit are gonna be the ones that aren't impacted by the future revenue reductions.
Yeah.
Private sector or public sector, it's not like this isn't a threat, like it's just,
Yeah. we're
it's
seeing-
happening in real time.
Yeah.
So maybe, I'm just thinking to the end of this meeting right now, maybe there's just introduction to these concepts. Taking a step back, understanding how we got here, it was a budget discussion saying, okay, this is the balanced budget that we're gonna provide and we want to do something for non-represented or however we want to terminate here. And then have the executive committee just spend a little extra time and figure this out. Cause I mean, everybody's got a great analysis and thought. I mean, everybody's very thoughtful here. And I do understand and I agree that. Yeah, we're taking a lot of time to talk about these, 68 positions. We're just gonna give them a little something. Let's just figure out what that little something is and move on.
Yeah, these are philosophical, really foundational, important conversations, because we also think that next year, that's why some of this is being proposed as one time, because we won't be able to sustain. We just won't.
Well, but so then, I mean, this is a commissioners and counselors from the Tri-County area. We should be talking about economic development, what's going good, what, community development, the things that are tangible in our community. We're looking inward and we're spending way too much time maybe on this topic, but we gotta get it done now that we're starting. That's the problem too.
I mean, that's sort of what I was trying to drive towards, we have
Yeah.
a set of recommendations that our staff have really thought pretty hard about. And while I think you're making an important point, that this is meant to be a one-time piece to kind of deal with this idea of retaining people that we have now for those that are below market, right? Or those who aren't benefiting from some of the other decisions that we made. So this isn't necessarily contributing to that problem over the long term outside of this 1 year.
You may wanna,
We did ask them to come back to us with these member.
and you may want us in the future to come back. There are some variations in local government where they're not allowing all of the vacation paid out. So
Yeah,
again,
some
we're
of those
looking at the liability piece. There are some options for the budget committee that we could be presenting that information between now and then. And be able to even refine this further as in terms of that outside exposure.
Yeah, I appreciate that.
Yeah, no, yep.
I'm ready to do this and move.
No,
forward. It's great information. You've done an incredible job. I'm not trying to diminish that. It's a really good job. Thank you so much.
And then just for clarity, we're looking at like a menu of choose one of these 4 different topics.
Well, the recommendation is for all 4 of these.
Oh, it is for all 4?
It's for all 4.
Yeah.
So I think we have a,
Counselor Solis.
Councilor Solis, did you have something you wanted to say about this one?
Not about this one. This one I'm fine on. I just, the conversation is lengthened, and there's a lot of, I think, opinions on it, and I understand it's also getting late, and it's probably going to move forward as is. But I just want to remind everyone that making these kind of decisions have a very large financial impact on an organization. Not only a financial impact, and that's obviously the hat I wear in my day job, but it also has an impact on staff. And so this isn't something to take lightly or move through quickly. I understand the reasonings behind it. And even Commissioner DeBone pointed out the purpose of COIC board is larger than this. It should be on some more economic things and larger scale across the Tri-County area. But I think that this, at the core, this and any decisions we do regarding pay, benefits, anything of that nature, really establishes what COIC is. And so I think is deserving of time of the entire board. So with that, I'm going to step out as far as additional comments on this particular topic and just let things fall where they may.
Do we have support for this one, for moving this forward? Looks like we have majority support in the room. What are you seeing on support? Okay. So longevity.
Okay, thank you. Longevity, again, doubling the base rate. So you can see there, we currently start at $33 per month for someone who's worked at COIC for completing 5 years. We're proposing that goes to $66, and then every 5 years it would go up by $66. It's not a huge increase in number of dollars, but double is significant for those who are receiving the higher amounts of longevity pay. And this was really meant as a appreciation and retention aspect. There are some employees who have been at the organization who are maxed out or topped out. And so this speaks to those. That was an interest last time when we spoke with the board at the budget discussion.
So the individuals that would not receive a cost of living or a merit, this would be something that would be at least recognizing that longevity.
Correct. And just in case the board is wondering, we have 24 people in the organization, non-represented, who receive longevity, just so you have a sense of scale as far as what this. Most are in the 5-year tier, but. And then the estimated increase in cost for the year would be $32,000.
Yeah, where are we?
Yeah, fine. Okay.
So it looks like we have majority support in the room here. What about online?
One thumbs up. 2 thumbs up.
Okay, so it sounds like majority support.
Everyone's getting tired.
Okay,
Okay,
let's move on to the final.
okay. Next slide, thank you. The last one is a new category of leave that would only be eligible for director level positions. Really meant to help with attracting senior leadership positions, retaining that. Those positions are a bit under market, particularly on the low end of the scale and also on the top end. And we're making movement this year towards that market goal. But this would be meant again for this year as a one-time thing, likely at 40 hours front loaded for those key leadership level.
As a point of context, typically when we bring someone on with the organization, there is a negotiation about some front-loaded time. This recognizes that and puts it into a little bit more formality. The other is that where we see the greatest difference between market is on the on these positions where we are 18, 25% or more below market. And so where you want us to be the market. And so this, for our leadership team, there's a lot that's asked of them and a lot of, opportunities, for the leadership that we have. And so it's a way to recognize that this would not necessarily be ongoing. It would be that if a director's position is at market, this would not be. Do you want to maybe touch on that part too?
Yeah, so intended that each year, we'd be revisiting on whether something like this would be needed or not as part of a package consideration. But the goal is to get the jobs to be within, 5% of market and not need to have some of these short-term things in place.
And so this gets people a minimum of an extra 40 hours. If I'm understanding correctly, and the additional 40 is at your discretion.
Correct,
Cashed out.
correct.
And again, it would be reviewed annually. So it's not a permanent,
Right.
very not a permanent benefit.
So typically it would be customary to provide some sort of a bank for a director level position when we're hiring. And so this gives that sort of formality of recognizing that. And so that it's also equitable of some positions, if you're not asking for it, this gets back to equity. So I typically ask, are there things, that folks are wanting to do or vacations or whatnot? And so it ends up being part of that negotiation to bring someone on. This allows that sort of more formalized.
So basically, this is the negotiating start.
This would be for those that are currently with us. I would be offering, and they are well below market, so then I would be offering 40 hours in recognition that we can't bring them to market this year. Nor probably next or the year after. And we would look at them annually, and so let's say that we'll pick on Hannah. Hannah's position is at market, then she would not be eligible for this the following year because she's at market, but let's say Michelle is not. So Michelle is still 15% out of market, then Michelle would be eligible for this. It would be at my discretion. Would be my least favorite of determining, but with the data and information that we get from HR, it makes it a little easier on how we would handle that.
Okay.
And about what number of positions would that affect?
There's currently 4 director positions. Yes.
Even after you build transportation.
Including transportation. Yeah.
Would these 40 hours are not eligible for cash out, correct?
Correct.
Use it or lose it.
So, just to jump back to the first slide of the danger of starting a mess,
Mhm.
they now have use it or lose it, and they have to take 20 before they could sell if they were paying.
So there's some sort of behind the scenes.
Don't come to work this week.
Yeah,
Or next. There's gonna have to be some finagling on this to make this work.
we tend to have people that are service driven that are wanting to come to the organization because of who COIC is and what we do. If I had concerns about that the cash out and just coming for the vacation, I don't see that as an experience.
I'm not overly worried about that, but now we're gonna require them to use 40 hours. We're gonna require them to use 60 hours before they'd be able to sell any of the vacation time that they weren't gonna take because they were so dedicated to the organization.
So that'd be a little over a week. And I want them to take that.
Okay.
They also would have to have a minimum balance of 120 before they would be eligible for cash out.
Cash
So
out.
year 1, they wouldn't be eligible anyway.
Yeah.
Why are they gonna have to use more hours? I'm saying they still the rule.
Because they have to use 20, the 40 hours here has no cash value. So presumably it would have to be used first before they would be using their cash value vacation. So now they're basically forced to take 60. And if they're at the director level, they've been here a while, if they have that bank, it creates some logistical hurdles that I'm sure you guys can work out after we vote.
I think the thing that it does, we are finally at a place of capacity. Where if someone is willing to stay with the organization in this period of time where we know that we're really out of market. If they value that work-life balance, we're creating an organization that can allow them to be gone. And we learn every time that happens too, and it helps us with cross-training, it helps us with, all of our core capabilities. It recognizes that there's commitment that's being made to the organization. That's beyond just thank you for the job.
But I'm hearing, honestly, I'm hearing from you that you think this is relatively important in terms of retaining particular.
I do.
People in director level.
I do. It may not work for everyone,
Right.
but I think many that are with us are here for the mission. And so, just because that may be so, it gives us a way of complementing that with saying, we see that.
And we're gonna be clear with employees, it's not guaranteed to be rolling forward, and if it does roll forward, it's still gonna be connected to the extent to which they're out of market.
Correct. Yep.
The market rate.
Yep.
Okay, where are we on this one in terms of support? So I think I'm seeing Mark. Here, okay, so I think we see a majority in the room. How about online?
One thumbs up.
Still just one? Okay, so I think that still gets us a majority.
Two thumbs up.
2 thumbs up, okay, right, so it's a yes. Okay.
Okay.
That basically.
That is it. Really appreciate everyone's comments, suggestions, and just the thoughtfulness that has been put into this, and excited to be able to share with staff.
Yep. And again, you had given us a cap of 184. We're below that. We think that we can, and again, some of this is not reoccurring for that very reason, but we did look at some of these things that could make other refinements that again, reduce that outside liability. And then Michelle has a request because part of this would be picked up by your dues, so.
Can I just ask one other point? I think there was some requests earlier that in the next budget cycle, we'd be looking at how we compare some of these things around cash out amounts, cash out caps.
Yep.
And some of the other stuff to see if maybe we need to make some further adjustments in the overall program that are beyond some of these kind of temporary things.
Love it. And we have all of that. Yep. Yep. Love it.
So the 136 cost for longevity increase and vacation accrual changes. The request would be to use 20,000 of dues. So the board had about 32,000 rollover that was not used last year. So using 20,000 of that. And then we would use CERC. So the CERC program had a fund balance of 250 that was available for use. Last meeting where we approved the budget, the board approved using 100,000 of that. We would be requesting the additional money for this of 116 to make that 136 whole. And I know that's CERC fund balance is one-time funds, and some of this is reoccurring, so that's where we would be bringing forward to the board and budget committee next year. Knowing that one-time funds don't last forever. No, that's.
CERC is a program that we sunsetted and we ended up with a fund balance.
A surplus, yeah.
Yeah.
And that was a direction last time was generally to make some investments now, knowing that some of these steps. That we're making are 1/3 closer to being at market, but ways to kind of carry us over and keep retaining and or where necessary attracting people.
Yeah. Yep.
While we're making a change to market.
We may not be able to make another third next year.
Right.
So, yep.
Thank you too for the work and your teams for the work, months of work that you guys put in.
A lot of work.
To take care
Do
of.
you need a formal resolution?
We do to spend your dues.
Yeah.
Yes.
Okay, so we need a motion for that, then it's an additional $20,000, right, or just spend 20,000 of the
20,000
balance
of
left
the
over at
dues,
the end
and
of
then
fiscal year
off,
26.
and then authorize us to spend 116,000 of our fund balance.
Versus a hundred.
Do you want to take a stab at that?
Yeah. So, let's try this. I make a motion to, use 20,000 of the carryover dues as well as 116,000 of the funds from the CERC fund, to cover the 136 total cost here in year one for those changes.
Second.
Any further discussion? Anything online? Okay, all those in favor?
So it's just, sorry, Barbara.
Aye.
Did you have one?
Oh,
Carlos?
he said aye.
Oh, okay, all right.
Aye.
All right, all in favor, so we got one from Carlos. Aye. Are there other in favor online?
Nobody's. Oh, good. Thumbs up, Commissioner Taylor.
Okay, and how about opposed?
Opposed.
Okay. Counselor Solis, anybody else? Commissioner DeBonne, I'm not sure if I saw you.
I said aye.
You said aye, okay, great. So one opposed. Okay, right,
Thank you.
we are at
Yes.
7:29, and we got a
So I have-
update.
Yeah, we just have updates.
So-
So I did a PowerPoint with all of this. That's pretty well prescribed in terms of what the updates are, but I'll run through them super quickly. First, let me start. This is not on the slide. We are in the recruitment process for our transportation director. We are looking for more applicants. We are keeping that open. We are flying that position broader than we originally started. So with some transit publications and other organizations. So if you know of someone, that position, we did make a change in terms of with the approval of the board budget, we changed that salary. So we're going out with the current salary, which is different than what it was originally posted for the last go round 2 years ago. And so that position is out right now. The youth employment and training position, we had a youth employment and training manager that departed our organization. And so we're going to hold off on appointing or deciding whether we're going to fly that position, because we are going to meet with the current team that has 2 leaders in it. We want to hear their best thinking on what the department needs. And then for Michelle and I, who have been tag teaming that, we want to provide our input in terms of observations too. The other is that we did start service in Klamath Falls, and that is going very well. Oddly, we are still listed as the service provider in Klamath Falls, and so it's lovely that we're back in Klamath Falls, providing adult employment and training services, as well as youth employment and training services. And then these are the projects that I wanted to, given our leadership between John and Mike, asking that we provide an update on some of the projects that are sort of not related to CED, and so wanted to call them out. The Central Oregon Civic Action Project is the one that is the civic assemblies, the democracy group. They came before us, youth homelessness, so there is a slide on where we are with that. The other is that we have the Crook County Prineville Drug-Free Communities Grant. The only update really on that one is they're finishing the year. You might recall they expended all of their funds. So we're really just in this period of waiting until we get to the late September timeframe when their year is over. We then will be more active in distributing their funding per their grant. So right now there's no money, no activity. In addition to that, there is a lot of information on the statewide shelter funding allocation. The statewide shelter program is started. That as of July 1, we are the regional coordinator. You will see on those slides that we have less funding and more need. And so in that, it's very descriptive in terms of what we are required to do as the regional coordinator. And so we are required to sustain, and it shows in there also the list of beds that we are required to first start to sustain. If we cannot, then we can work with other partners to allocate the dollars differently. Also wanted to let you know that we did receive 50,000, which thank you to Sean and his quick work behind the scenes. There is a conversation going on in the parts of the community around an inland port. Inland ports are not unique, but they're very unique to Oregon. This could be something that could be incredible for manufacturing and for our trades or not our trades, but our products getting to market. And so our friend at USDA said we could probably get you some seed money so you can coordinate that conversation in a meaningful way to help the region. So we were awarded 50,000. And then you might all recall that there was a discussion around us being the recipient of funding on behalf of Heart of Oregon so that Oasis Village could get some landscaping. I just wanted to follow up and let you know that we were in fact awarded that funding that is going into contract. We don't have anything other than we are the recipient in the conduit. So Heart of Oregon and their youth will be doing that landscaping and working with Oasis Village. So be on the lookout for some landscaping that's happening in Redmond and Oasis Village. And so I'll send this out so that everyone has this slide deck. If you have questions, you want to have coffee, please let me know. I'd be happy, particularly for our elected folks. The statewide shelter program is a really prickly one because the state gave a lot of money to the system. We stood up a lot, and then that money is now gone. And so our local nonprofits are sort of saying, what do we do? And we were saying, we sort of have been talking that this is coming and it's here. And so we're going to do our level best to try to sustain what it is we have. And so thank you again to Michelle and her team, because they are the ones with the sharpened pencils and having very hard conversations, along with Sean and his team on the housing side, being the bearer of some very bad news that the dollars are not as they had been. And we are likely next year going to be looking at even less. So I hate to end on that, but what I will say is that I couldn't be more pleased with the way in which our team shows up in the spaces of really difficult conversations. And we've had some of our partners come before this board and share concerns. And having sat through the first two, which were the prickliest in terms of the statewide shelter program, I think that you would all be incredibly proud of how your team shows up in understanding the complexity, understanding the impact, and sharing how we are as partners in getting our partners through this difficult time. So that's what I wanted to say. Ta-da!
Okay, and I think with that. we
So I'll
are
send it
gonna,
out.
Be adjourned for the night. If people have other questions to follow up.
Yeah,
on that
yep,
topic.
Commissioner Taylor has
Oh.
his hand up.
Yeah.
Commissioner Taylor, go ahead, please.
I just wanted to mention, I love the port idea. I think it's a fantastic idea, especially when we're dealing with some of the issues with the Port of Portland. But we have to be able to include in the conversation infrastructure development, especially 97 going up and down Central Oregon, to be at the foremost part of that conversation when talking about this. And if we can get federal dollars to marry in with this project, I'm 100% for it.
That would be actually right at the top of the list around tying it together with regional solutions with our SEDS process as well. And it would help in terms of freight mobility as well as resilience around Cascadia. So Highway 97 is definitely a priority that would be included in this. So thank you for noting that.
Okay, with that, we're adjourned.
Okay.
Thanks, everybody.
I don't want your report.